Hello, this is Jordan, and this is your precious metals video update. This video is being recorded on the late evening of Wednesday, August 16, 2017. Thank you so much for joining me today. And in this video, I'm going to discuss the technical outlook for gold and the gold stocks. And starting off here, we have three charts in this image. We have gold at the top, gold against foreign currencies in the middle, and gold against equities at the bottom. And as we discussed in our last video, while gold has consolidated in recent months, it has really not performed that well considering the extreme weakness in the US dollar. The dollar kept going lower and lower, and gold wasn't able to break above 1300. However, in recent weeks, the dollar has stabilized a little bit. It hasn't made a new low, yet gold has perked up at the same time, was able to rally up to 1294. And the reason for that is we've seen real broad-based strength in gold. In other words, it's been rising relative to foreign currencies, the equity market, and even it's been rising against bonds, which is not shown in this chart here. But if the dollar is not plunging, that's what needs to happen for gold to continue to rise and break above 1300 here. You need to see it showing strength against foreign currencies, which it has, and especially against the equity market, which I think further equity market weakness could be the catalyst that allows gold to break above this resistance at 1300. But if you look at the lower two charts, gold against foreign currencies, you can see it's rallied back above the underside of trend lines there. And gold against equities at the bottom, it broke above the first trend line. And I just love to see this kind of performance, this relative strength in gold continue. I mean, if we see gold relative to foreign currencies and equities make another leg higher, then gold will go through 1300, even if the dollar doesn't drop from here. So the way things are looking, it looks good for gold, and gold should be able to break above 1300 here and test that 2016 resistance at 1375. I mean, a big reason why we turned bullish, I mean, we were bearish for a while, is because gold was able to rally from the July low. Well, first of all, that low in early July, gold and gold stocks were on the cusp of a significant breakdown, and then they just reversed it. And that reversal and that rally has gone a good way higher. So in other words, if gold was really going to roll over and break below 1200, that rebound that it had in July, we would have expected that to maybe peter out below 1240. So the fact that gold has been able to rally all the way back to 1294 and especially above 1260, I mean, that's just showing quite a bit of strength considering gold had already twice tested 1300, so there's a lot more strength than we thought, at least a month or so ago. So anyway, things are looking good for gold. We think the odds favor a breakout, and that gold can get to 1375 and retest the resistance in that area of the last four or 5 years. Now, the miners, of course, have been lagging for a while. I mean, the miners, we know that they do lead the metals, but it's not always true that the miners have to be showing a positive divergence. I mean, there's many times, even in bull markets, where the sector is consolidating, and when it's consolidating for a while, that can be when the miners are really underperforming gold. And so we've seen that basically since the middle of February, the miners have been underperforming gold, and that underperformance has really been telling us gold is not going to break out. But it's been going on for so long that, I mean, it's really already priced into the market. It's nothing new. We know what's happening. And at the same time, I mean, we see, if you look at the bottom, GDX has already broken out. And this is its daily line chart. I mean, people should use these I should say I prefer, when it comes down to it, looking at the daily line chart, because what matters is not the intraday ticks, but really where is the market closing every day? Where is the market closing every week? And we can see that GDX it's broken out of the downtrend, and it appears to be holding above the 200-day moving average. It's difficult to see, but also the 200-day moving average it's starting to flatten out, and maybe in the next days or the next week or two, the slope is gonna start to slope higher. I mean, that's a good sign, because when the market, I mean, earlier this year, it kept failing at the moving average. The moving average was trending down. That's a bad sign. But now, that downtrend is stabilizing, and we're into a more neutral to bullish trend now, and that's being reflected by the fact that GDX has been able to get above the 200-day moving average, and I believe it's closed above the 200-day moving average the last 3 or 4 days. And the last time it did something like that, I think you have to go back to October 2016. Obviously, GDXJ has also been lagging, and it's been lagging GDX recently. But GDXJ closed at 33.34. There's a confluence of resistance. You can see it there. There's the horizontal line. There's the downtrend line from the 2016 high. There's a 200-day moving average. They're all kind of in that 34, mid 34, high 34 area. So if we can see GDXJ just get above 35 or get to 35, that would be a significant breakout above a confluence of resistance. And my targets, considering gold, my upside target of 1375 for gold, my targets would be GDXJ around 40.41, GDX 27. Now, I mean, continuing to talk about the stocks here, these are my own indices. The top is my 55 stock junior index, and half of that index is similar to GDXJ. It's kind of those senior juniors, those larger junior companies, whereas the bottom half of it is companies with, I call it my mini GDXJ index, but the median market cap of those 27 companies is around $100 million US. So those are typically the juniors that I like to invest in. Which juniors are, they're not penny stocks. They're established enough. Which juniors that are worth $100 million have potential to go to 300, 500 million, or even $1 billion in the next couple years. So that's that index. And so the top index, you can see, I mean, the triangle there, I mean, that's really tight. And so that index is obviously very close to a break one way or the other. And, a month or two ago, I would have told you that it's going to break lower. Now, given, what I've already said, I think this is going to break higher. And the confluence of resistance I talked about in GDXJ, you can see the same thing in the top index. It closed at about 389. And the resistance, I mean, the 200 days it's at 391.6. So it's about 2 points higher. That's less than 1%. And then if you look at the horizontal lines there around 400, 405, and the downtrend line from September 2016, that comes in right at about 400. So again, if we can just get more than a 4 or 5% move in the juniors, that could lead to a pretty good pop. Beyond that, the mini index at the bottom, that's already broken out of well, it's not really a triangle, but it's broken out of the trend line from the highs, and it's trading above the 200-day moving average. So we've seen more strength in the smaller juniors. I mean, exploration has really been the place to be, not in the producers or not in the optionality plays. I mean, we know that the long-term fundamentals for exploration companies are really fantastic. And anyway, the mini index there closed at 191, and 200 is important resistance. And then the next resistance line after that is around 212, 215. So I like this setup, and I do think assuming gold can break above 1,300, I do think we're going to see these move higher. Just another comment about gold in the miners lagging. Sometimes that you see that, and then you see gold break out. You see it make an important breakout above a certain level. During that breakout move for 2 or 3 days, then you can see the stocks really suddenly reflect that and have a big move higher just in a short amount of time. So I think that's something we could see if gold is able to break above 1,300 and maybe get to 1,315, 1,320. That could be when you see juniors jump 10, 12, 15% in perhaps in 3 or 4 days or 2 days or whatever. So that's something to keep in mind moving forward. Now my last chart here is the one it's the last chart I use in all these videos, and that's the weekly bar chart of GDX and GDXJ. And looking at GDX, it has a confluence of weekly resistance just below 24. So I'd love to see a weekly close just in the high 23s. Let's call it 24. I mean, a weekly close at 24 for GDX, that's only 4-5% higher. 4.5% higher, 4% higher, whatever. A weekly close just above the high 23s, or weekly close at 24. I'm sorry, I'm repeating myself, but that would be significant. And for GDXJ, the same target is 35, which we talked about before. That shows up on the daily chart. And so based on that 1375 gold target, I said 27 for GDX and I think 40 or 41 for GDXJ. So based on that, we could see miners approach or come very close to those strong resistance lines, which are around 27 for GDX. I mean, those double lines there that are not quite at the top. And then for GDXJ, those come in, I think, around 41.5, 42, 42.5, that area. So I think if gold can get to 1375, that's where we can see miners get to. I think it remains to be seen if this is the start of a real massive move higher, you know, that third wave type of move that takes gold through that 1375 to 1400 level, and it would take it back to 1550 where the market fell apart in 2013. And as you can see on these charts, I mean, the equivalent for that move, I mean, the miners would be lagging a little bit in the big picture long-term sense. But that, you know, that move, if that were to happen, we'd see GDX, go through that resistance at 30, and GDXJ go through that resistance there in the just below 50. For me, I'm not looking for that type of move yet. I think 1375, we could get there. We could see a decent pullback from that point forward. I mean, the dollar is still due for a big bounce, and so that concerns me. And I mean, but who knows if the Fed is really done and they're not going to hike rates again? You know, maybe inflation starts to pick up, real rates turn more negative again. So that's all I'm saying. I'm saying that the short-term outlook here for the next, call it the next 2 months or so, maybe 3 months, it's looking fairly bullish to me. But I'm not. We have to move forward and get more evidence before we can say, this is the start of that real monstrous move that's going to go through 1375 and take gold to 1550 or 1600. I'm not there yet, but then again, we'll see what happens. Hopefully, gold can break out here and get to 1375, and that would certainly be a great sign, just generally speaking. On that note, you can follow all my work at thedailygold.com. You can consider subscribing to my premium newsletter. It's only $149 for 6 months. You can go to thedailygold.com/premium. We focus on market timing and stock selection in the juniors. If you want to know which juniors really have the goods and the best potential, sign up for our service. It's highly affordable. We answer subscriber questions. Thank you again for listening and watching this video. I really appreciate it, and I look forward to publishing another update for you in the next couple weeks.